Hi, and welcome to the Stockscores Market Minutes for July 6, 2015. This week's topic, message and timing. You want to always analyze a stock's chart on at least two time frames. If you're a day trader, you probably want to look at the 2-minute and the daily chart. If you're a longer term position trader, you're probably going to focus on the daily and the weekly chart. It's important to have these two time frames because the longer term time frame is going to tell you what to do. It provides the message. The shorter term time frame tells you when to do it, the timing. If we look at a chart of the S&P 500, this is a 3-year weekly chart, and we can see that a short-term breakdown has occurred this week. I'll be talking about that in a moment. So the long-term chart is telling us to be a seller. Not a strong seller just yet, but at the same time it is a warning signal. Then when I jump to the 1-month intraday chart, I can see that we are building a little flag pattern here after a recent breakdown. If we get a breakdown from this flag pattern, if this pattern here comes with a break to the downside early next week, then you will have the timing to tell you to sell the US stock market, or at least the large cap stocks. So the long-term outlook is telling us be cautious. The short-term outlook is giving us the timing point. Unless we get a breakdown from this flag pattern, I wouldn't worry about it too much. But if we do, in fact, see a breakdown from this pattern early next week, then I think you should be very cautious. And that is the message and the timing of the market analysis using these two charts. All right, well, here we are at the charts that we just spoke about. And let's elaborate on this a little bit. This is a 60-minute chart going back 30 days. And you can see that the market was going sideways for quite some time. And then it really started to weaken this week. We had a breakdown on Monday. Tuesday, Wednesday, Thursday, we rallied back to the downward trend line. That's normal to be expected. The trend went a little fast to the downside. We always expect it to come back to the trend line. That is a flag pattern right there. What we now have to see is whether the market's going to break down from this pattern or break up and through the red downward trend line. Basically, whatever happens in Greece next week is going to guide what the market does Monday morning. So that's what you want to watch for. Do we break this downward trend line? That would be a positive. Or do we break down through this green line, which is the lower envelope of the flag pattern? That would be a negative. Here's that longer term chart of the S&P 500. This pattern we talked about in recent weeks is called a rising wedge pattern. We had a breakdown this week. We're still holding that long-term upward trend line, so it's still long-term bullish chart, but short term there are problems that we need to watch for next week. The Russell 2000 also flirting with its little short-term upward trend line. You can see this upward trend line right here is just being penetrated slightly. However, the long-term upward trend line is still intact, so not a real long-term run for the hills kind of pattern, but certainly something that deserves some caution. The small cap sector looks better than the large caps. The small cap sector is pulling back from a high. The small cap sector is still well above that long-term upward trend line. So I think what we're probably seeing is money rotating out of large cap and into small cap. Here's the TSX 60, which had an extra day of trading this week, and it is still in a downward sloping channel in the short term. In the longer term chart, we're stuck in that sideways pattern, but we did break that cycle of rising bottoms a few weeks ago, and that is a concern. I think we could see lower prices still from here, perhaps testing this $20.50 to $20 support price on the TSX 60 Index ETF T.XIU. The TSX Venture Market was in a pretty decent optimistic pattern building here up until the start of June. And that's when you can see that the stock scores really started to dive. And the reason they dove is because we started to break that optimism. That cycle of rising bottoms was broken when we broke this low here. And that tells us that the sellers are getting motivated again with the TSX Venture stocks. Not a real bad pattern. It's now gone from an ascending triangle to a rectangle consolidation. So still a stable pattern, but not so much of an optimistic pattern. But what we have to watch for is whether this green line of support is broken. I want to keep an eye on that in the next few weeks. Here's the Treasury Bond ETF, TLT. A lot of the problems in the market are a result of the bond market unwinding. There's a huge amount of capital in the bond market, and when a hedge fund starts losing money in their bond portion of their portfolio, they may have to sell stocks to cover some of their leverage. And so we're seeing some pretty strong selling in the bond market, and that may be bringing some selling in the large cap portfolio for these big funds, and that could be a reason to see more weakness in stocks. US dollar starting to tickle higher, could break the downward sloping trend line here. So again, this is a flag pattern. We had a nice strong upward trend, pulled back. If we break to the upside through the red line, that would be a sign that there's more strength coming in the US dollar. Notice also that there's a little rising bottom that's formed here. I've highlighted that in green. That is also showing the world getting a little concerned about maybe what's going on in Europe, maybe other countries that could be facing default, and that is putting money into the strength and the safety of the US dollar. That is negative for commodities. So you're seeing gold dip down, as it's been doing for some time, but also oil broke down this week, moving down just to some support, maybe through it a little bit. And I think, again, that is a concern. Not a terrible pattern yet, but certainly a concern area. If that US dollar spikes higher next week, I think that could be real negative for oil and send oil prices down again. You can see here on the fear index, fear is picking up. We've seen in the last, well, basically all of this week, some good action in the VXX. If there is a market correction, this is where you should trade if you're a short-term trader. Focus on moving in and out of the VIX-related ETFs, because when they pick up like this, you can see the big volume pick up here. That makes it a lot of fun to trade this thing. You got to be fairly nimble with it, but it is a great way to make money in a correcting market. So, US stocks, I've lowered my short-term rating to bearish, still neutral long-term. Canadian stocks, same as last week, neutral and bearish for short-term. Gold, bearish short or long-term and short-term. Oil, bearish long-term, neutral short-term, but very close to switching my short-term rating to bearish on oil as well. The market is showing concern. A bad result from Greece could spark a drop in equities, a spike higher in the US dollar, and a drop in the commodities. Short-term signals are showing some negative signs, but the long-term outlook is still neutral to optimistic, depending on what market you're looking at. Trade with caution as fear is rising, but remember, fear is a fun thing to trade. Focus on the VIX-related ETFs if we get a market correction in the near term. Well, that has been the Stockscores Market Minutes for July 6, 2015. Have a great week in the market and trade well.